Hello and welcome to Startup Street. I'm Arundhati Ramlin, and joining me from the Bangalore studio is Ritu Singh. And these are the top headlines from the startup space. Tata Group in talks with Taiwanese supplier Wistron to establish a joint venture to assemble Apple's iPhones in India. Bloomberg News reported the plan could result in the Tata Group buying equity in Wistron India's operations, or the two companies building a new assembly plant, or executing both those moves.
Dukaan partners with ShareChat and Moj to enable merchants on its platform to collaborate with creators. Launching first on Moj this month, the partnership will enable SMBs on Dukaan to promote their products and services with the help of millions of regional creators who have a strong influence among their audience.
Myntra to hire around 16,000 people directly and indirectly as it prepares for the expanded demand of the festive season of Diwali. These jobs will be primarily focused on the delivery, logistics, warehousing, handling and customer support roles. Of this, the company has pledged to hire 2,500 women and 300 differently abled personnel.
Twitter agreed in June to pay $7 million to settle a compensation dispute with the whistleblower Peter Mudge Zatko, whose allegations will be part of Elon Musk's case against the company. Sources told Reuters Zatko will meet the U.S. Senate Judiciary Committee on the 13th of September to discuss the allegations.
Bitcoin surges past the $20,000 barrier. The biggest cryptocurrency rose more than 7% to $20,796. A two-week high. Ether rose 5% to also hit a two-week peak at $1,717. Bitcoin had been as low as $18,540 on Wednesday. Well, those were the headlines that we're tracking for you this evening on What's Brewing Today. The last few years have witnessed constant reiteration of the need for carbon neutrality. India intends to go carbon neutral by 2070, and a key focus area in the process is the adoption of low-carbon mobility. The smooth transition to the electrification of vehicles is on top of the minds of the government and automakers, not just in India, but across the globe. Global electric vehicle sales have grown by 61% this year. In India, over 580,000 EVs were sold till August this year, and that's already 46% higher than last year. But despite the central and state governments' push for faster transition to electric mobility, the EV space still grapples with challenges like lack of charging infrastructure and battery swapping technology. Today, on the occasion of World EV Day, we discuss how the startups in the EV space are doing their bit to make mobility affordable and sustainable. We have with us Naveen Dachuri, the co-founder and CTO of Yulu, and Saurav Kumar, the founder and CEO of Euler Motors. Gentlemen, thank you so much for joining me on the show today. Saurav, let me start with you. What has the journey been like for Euler Motors? What were some of the challenges you faced when it came to the electric vehicle space? I think you're on mute, Saurav. Can you unmute yourself, please?
Yeah.
Yeah, okay, great. We can hear you. Please go ahead.
Yeah, thanks for having me on the show. Last 5 years have been amazing. I think India, we started Euler in 2017. Our focus has been on the commercial vehicle segment. Over the last 5 years, we have launched one of the three-wheeler cargo, which is seeing like unprecedented demand right now. We have more than 9,000 vehicle order book that we need to deliver. We have set up charging stations on the ground to make sure the vehicle if the customer buys them, they can find a nearest charging station to charge them. Overall, the mood of the country, when I say if it's a retail customer to a very, very large company like a Flipkart, Udaan, everyone wants to switch to electric mobility. They see value into it. It's not just the carbon emission or the greenness of the electric vehicle. They see a lot of value in terms of efficiency. They see lower cost per delivery. They see efficiency and trackability, which is like through software that we have been sort of adding to our vehicle through enterprise mobility platform that we have built. So in general, we have seen if you compare 2017 and 2022, where we are right now, I think it has been a hell of a ride, but it has been a growing. I think there has been a lot of support from the government. There's a lot of push from the supplier ecosystem in India. And there's, in general, very, very positive sentiment that we are seeing right now. And I think next 5 years is going to be one of the most amazing time for the India the EV journey, where we'll see a lot of companies and product, not just OEM, but product suppliers out of India building for the global EV market.
Well, a lot of growing between 2017 and 2022, Saurav, you say. But Naveen, let me quickly bring you in as well, because, your mission to make urban mobility seamless, shareable and sustainable. How much of this have you achieved? And if I were to ask you, what were the most challenging and the most exciting parts of this journey?
Good evening, Ritu, and thanks for giving us the opportunity to be part of this this particular event. I'll start, like our journey also started back in 2017. We started with cycles because we wanted to understand the actual need for sharing or shared mobility with respect to an Indian ecosystem. And within 6 months, we quickly realized, yes, this particular solution is going to work. And we already had in our roadmaps to introduce the electric vehicle because we always believed in the philosophy of shared and sustainable mobility. So in 2018 or 19 timeframe, we introduced our electric vehicles. Currently, we have close to 10,000 bikes running in 3 cities, and we have done close to 3 crore plus rides till date. When the pandemic hit, and before pandemic, we were mostly focusing on people mobility. By people mobility, what I mean is people used to use our vehicles to move from one location to the other location. And that is how we use technology and innovations to build this whole network for people mobility. But when the pandemic hit us, it was really bad. Our revenues really tanked to zero. We were looking at other avenues, how to bring revenues into our system. That is when we realized that there has been a big push for the last mile delivery. And this demand was coming from the e-commerce companies where they were looking for folks as well as the wheels to deliver things to different locations and places.
Absolutely.
Right. And that is when we started a pilot project. We started giving or deploying our own field execs to deliver things so that we can get a good understanding of this business. What we soon realized is there is a large potential and a huge potential because the prolonged pandemic basically made this a habit. And it was not just seen in urban cities, it also was seen in tier 2 and tier 3 cities. So based on the current stats, we are looking like there will be need for millions of gig workers, especially when it comes to last mile delivery.
Absolutely.
And
you've had absolutely, Naveen, and you've had these pilot projects, and we're going to discuss the business in detail a little bit more. But let me go back to Saurav and ask you a little bit about your business. You launched the high-load EV, which you claim is India's most powerful EV with highest payload capacity across the light commercial segment in India. If you could quickly take us through the kind of traction you've seen for this product, and is there anything new in the works?
When we started, we had a very simple thought process, which was if you want to build electric vehicles and you want to build them in a way to replace the ICE engines of the world and to combat air pollution, your vehicle has to be, if not matching the same performance, beat the ICE engine. It needs to have better efficiency and it needs to be built for the future. So Euler, every product that we build, we think about 3 things, which is performance, efficiency, and design. And Euler High Load, which was our first product out of Euler stable, we launched last year. It beats every ICE engine out there in terms of its performance. It has one of the highest payload carrying capacity, which is directly linked to the earnability for the customer. Like it's 50% more payload capacity certified by the Indian government. It has one of the highest range. It has fast charging capability. The battery is liquid cooled. That means there are no fires and the battery has 5 years sort of life. We are one of the first OEM to give that 5-year warranty also on the battery pack. So we are very much a technology sort of focused company. We have been thinking of building product that can actually compete with ICE and be better at generating revenue, saving money for our customers.
Right.
And that has reflected, if you see, in our demand. When we launched, we were talking thousands of vehicles in demand. And today, Euler has 9,000 vehicles that we have to deliver. We were in 3 cities back then, earlier this year. Today, we are planning to go to 20 cities by the end of this financial year. So we're going to be everywhere. And that's mainly because there's demand from everywhere.
Okay. Okay, you are going to be everywhere, but let me ask Naveen as well, because, Naveen, we've seen your bikes around Bombay. I've driven them there in Delhi, in Bangalore as well, but what's next? And we've also seen a lot of delivery executives using your bikes. Any partnerships on that front, anything in the pipeline that's interesting you could take us through?
Yes, so again, as I mentioned, there are two things. COVID time gave us we pivoted into one more vertical where we started giving our vehicles to the gig employees for last mile delivery, and that showed a huge demand for creating the infrastructure for charging systems. And we are into swapping mode. What that means is these delivery gig workers, they basically bring our vehicles to the charging system like any other petrol pump or the gas stations to get the battery swapped. So again, we have the largest infrastructure currently now for the battery swapping. We have already done close to 3 million plus swaps till date. And our plan is to build this whole infrastructure in India. And for that, you need two things, right? You need a partner to first develop the vehicles. And that is when we did a very strategic partnership with Bajaj. Our future vehicles are going to be coming from Bajaj. And the second thing is you also need a partner to build this whole battery as a service infrastructure. And we have good partners and people are supporting to build that infrastructure. Having said that, we also need a lot of support from government also, so that the proper infrastructure requirements can be fulfilled, and especially related to power and other facilities. And this is what our focus has been.
That's what your focus has been on. All right, Naveen and Saurav, let me also ask both of you, if you could quickly take us through the kind of revenues you're seeing, where can you see yourself ending this year, and what are the targets you've set for yourself? So, Saurav, let's start with you.
So revenue-wise, we did something close to 20 to 25 crore last financial year. We are looking to grow 10x this year. I know it's a very, very big target, but that's where we are so confident that we should be closing this financial year at 300 crores. As a company, I mean, we were producing 150 vehicle earlier at the starting of the year. We will be ending with closing like close to doing thousands of vehicle manufacturing per month. In that, we have already did close to 150 sort of crore in capex allocation that we have done to the new factory that we are deploying near NCR. So we should be closing at 10x our revenue around 300 crore at the end of the year.
And Naveen, very briefly, your targets as well for the end of the year, for the near future in terms of revenue, profitability, expansion?
Yeah, so I already mentioned we have close to 10,000 vehicles. 70% of our fleet, we are using it for the last mile delivery. We are unit economics positive, and the growth wise, our plan is in next 1 year, we want to grow 10x. We have all the things lined up. Our biggest dependency now, or I would say the bottleneck now, is on the supply chain, where the whole OEM world is seeing already the supply chain constraints when it comes to especially the EBOM components or the electrical components. But that is our plan. And with that plan of 10x, we are expecting that we will be doing close to, again, 300 million battery swaps. And for that, we will be setting up close to 500 charging stations pan-India. Expansion wise, our plan is to go to eight different cities. Revenue wise, I cannot talk much, but unit economics wise, we are positive so far. And we see that we are on track to build a very sustainable business when it comes to the shared mobility as well as the last mile delivery.
All right, so on track to build a very sustainable business over there. All right, Naveen and Saurav, thank you so much for joining us on the show, but we're completely out of time at this point. But thank you, gentlemen, for joining us on the show.
Thanks.
Thank you. Thanks for having us. Bye.
On that note, it is time for us to head into a short break. But on the other side, we put the spotlight on Innovative Payments and their growth story. That's coming up.
Welcome back. Now, in this segment, we are going to put the spotlight on payments fintech startup Innovative Payments. A collaborative commerce platform, Innovity has raised about $75 million so far from investors, which include Panthera Growth Partners, Patni Family Office, among others. Now, according to the company, it is the largest provider of payment solutions to enterprise merchants with a 76% share in all payments happening in this particular segment. Rajiv Agarwal, Innovity's founder and CEO, joins us now. Rajiv, welcome to the show and thank you for your time. Let me quickly start by asking you, this recently you got RBI's nod to operate as a payment aggregator. We understand that is still an in-principle approval. When are you expecting the final nod? And, what would this license mean for your company?
Yeah. So firstly, thanks a lot for inviting us to the show. Happy to be here. So as you rightly said, we have received an in-principle nod. So that's how the process works with RBI. In the first phase, it's an in-principle nod, and then we are supposed to undergo certain qualifications on the audit, etc., which is a period of about 6 months. At the end of it, that converts into a full license. So yes, that's how it is, and that's the way it is for all companies who have received an in-principle nod currently. What it means for us, I think there's a lot of things that happen. So one is that clearly it's a strong endorsement that Innovity is carrying out innovation responsibly for its customers, because ultimately we are dealing with the money of the consumer, the money of the merchant, and it's important that whatever solutions we provide, they are operating with extremely high integrity in a safe environment and providing the value in a responsible manner. So that's the first part. The second thing is that now being a licensed entity, there are certain kinds of services and certain kinds of access to data that become available to us, which would not be there to unlicensed entity. And that allows us to create products which are superior to probably what our competition, which is not licensed, would be able to do. And that therefore automatically has a business impact, both in terms of revenues as well as in terms of margins.
All right. Hi, Rajiv. Arundhati here. So now Innovity recently got RBI's nod to operate as a payment aggregator, but you've also raised $75 million so far, including the $45 million recently in a Series A D round led by Panthera Growth. So what is the current valuation of the company and how do you plan to use these funds?
So our post-money valuation is $250 million. And how we intend to use the funds is broadly in 3 areas. One is that we have been looking at a lot of expansion in the mid-market segment. By mid-market, I mean the regional retailers, which are not these large enterprises, but the regional retailers. And they are suffering on one side with a lot of competition from online. On the other side, a lot of competition from the organized retailers becoming larger. And therefore, they need access to good technology solutions which can help them to compete better. So first is going to be a lot of market expansion. The second is we are looking at a lot of new products being introduced in broadly 3 areas. One is we're looking at a lot of purchase tools being created on top of UPI. Traditionally, a lot of our development has happened on cards. We're looking at a lot of development on UPI. Second is we are looking at building together tools which help these small merchants come and become a part of the ONDC platform, which is shaping up. Which will help them to get discovered better. And the third is looking at expansion into categories like healthcare, wellness, and maybe over time even hospitality and into restaurants. The third utilization is that there are some strategic assets that we have identified, and we would be keeping aside some small pool of money for some acquisitions.
What kind of, acquisitions are you looking at? Anything on the table that you could disclose to us?
No, not right now, but hopefully you'll get to know in the next few weeks. But yes, we are looking at acquisitions broadly in 3 areas. Either they can give us access to distribution or they can give us access to technology.
All right. And what is the volume and value of payments that you're currently processing? Could you tell us about that and your current market share in merchant payments overall?
Sure. So let me try to put this in context. So like I said, we classically have been very strong in the card payment space, where of course now UPI is also getting added on. In the card payment space offline, if you look at it, in the enterprise retailers, and by enterprise retailers, I mean these super large enterprises which are $6, $7, $8 billion companies with pan-India presence, the likes of a Reliance, the likes of a Madura, and so on and so forth. So if you take the super large enterprises in the fashion, grocery, healthcare, electronics category, then we have roughly a 75% market share of all digital payments that happen there. This roughly contributes to about anything between $9.5 to $10 billion annually. UPI is a small portion of it these days, but it is also growing very rapidly. We process these transactions from more than 2,000 plus cities, and they're close to about 90 million unique consumers who come and touch our system on an annual basis.
All right, and you've also earlier said that the company will evaluate an IPO over the next 24 months. Any update you could provide to us on that front?
Yeah, sure. So for us, it'll be exciting to do 2-3 things. One is that so we are looking at seeing how we can take our revenue to a $100 million range and take it to $100 million range while having raised less than $100 million in capital. So that would be exciting for us because that would mean that we have actually solidly created value. We believe there are 2-3 factors that we need to look at. One is that we want to hit an EBITDA of anything between 45 to 50 crores a quarter. We believe that's the right kind of a scale to go ahead and get listed on the stock markets. We believe that would happen when we are close to $100 million kind of a range, or where we are close to about, say, 150 to 160 crores per quarter of revenue. Today, our enterprise business is already generating anything between 4 to 5 crores a quarter. Will generate about 8 to 10 crores a quarter by the end of the year. So we see that by sometime in the calendar year 25, on a quarterly basis, we would hit these targets: 45 to 50 crores of EBITDA, between 150 to 170 crores of revenue. We believe that's the sort of goal, and that's as soon as we hit that target, we would just go ahead and start the process for an IPO.
Rajiv, briefly before we let you go, a lot of focus for the fintech companies, especially in the payment space, has been around the regulations coming out from RBI. We saw them banning extending credit lines through prepaid payment instruments. That was a bit of a shock for the BNPL players. That's also an area you operate in. There's a lot of discussion about what to do with MDR rates. Again, something that impacts you very closely. Your quick final thoughts before we wrap this up.
I think we believe the regulator is really putting in place the kind of guardrails that are necessary for innovation to happen at scale and responsibly in the country. So we are very, very supportive of the kind of actions that the regulator has been taking, because it's finally we have to realize that we're dealing with the money of consumers, with the money of businesses, and it's important that there be financial services work on the concept of trust. And trust happens only when the service that has been promised to you is delivered in a transparent, fair manner and at the right cost. And that can't happen if guardrails are not put in place. So if you ask us, maybe it's a contrarian view to what you would hear from other startups, but we are very, very supportive of the kind of regulation that is being brought into place. We believe, yes, temporarily it may slow down things a bit, but the kind of solution that will emerge from this would be very responsible solutions, and there'll be solutions which will scale up and last.
Right, Rajiv. So you support that move. All right. Thank you so much for joining us on the show today, but we're completely out of time, and we wish you all the best going forward.
Thank you so much. Bye-bye.
It is Friday, and it's time to take a look at all the notable deals that took place this week. The Indian startup ecosystem witnessed a total of 22 deals valued at over $160 million as per Venture Intelligence. Meanwhile, since the start of 2022, the startup space has seen 861 deals valued at over $20 billion.
Well, speaking of some of the interesting deals this week, space tech startup Skyroot raised about $51 million from GIC and others. Akshay Kalpa Organic raised $20 million from British International Investment, Lok Capital, Venture Dairy, as well as others. And meanwhile, instant gold loan provider Rupeek, technology connectivity company iBus, and fintech startup Gromo raised anywhere between $11 to $16 million each.
And with that, it is a wrap on this edition of Startup Street from Ritu and me. Many thanks for watching.